right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is May 6th, 2025, and the bifurcation of the global economy is being laid bare for you all to see this morning. Something we haven't talked about in a while. Small subset of the population doing really, really well. Everybody else, not so much or not at all. And you can see that perfectly with these two stories that we have just a few hours apart. First, we had yesterday, Ford. Ford earnings were awful, absolutely awful. Now, the headline is Ford beats expectations because this is what we always do. We lower expectations constantly. We lower them too much, so then when we report terrible results, we can be like, well, we beat expectations. At least it's not as bad as we were saying it might be. But some of these numbers with Ford, net profit down 64% year over year. Think about that for a minute. I mean, Ford's profit more than cut in half, virtually wiped out. EVs aren't selling. Profit margins are getting crushed. Vehicles are not moving. People just are priced out of the auto market the same way they've been priced out of the housing market. Higher interest rates, higher vehicle prices, they're just not moving. And so Ford's reporting terrible numbers. They also pulled their guidance. They're calling for a $1.5 billion hit due to tariffs. Ford is now the second of the big three automakers to withdraw guidance. The third, Stellantis also withdrew their guidance a few days ago. The third, GM, dramatically lowered their guidance. So all the U.S. auto industry is reporting big effects due to tariffs. So Ford's news was just really bad yesterday. The stock, all things considered, is actually doing okay here, considering just how bad the news is. Maybe some of that was priced in. Although the whole concept of things being priced in, I'm challenging that whole kind of thinking after watching the market's reaction to Berkshire Hathaway yesterday and how the stock sold off on Warren Buffett retiring. I mean, at one point yesterday, Berkshire Hathaway was down 5.5%, 6% or something like that. Are you telling me the market was not expecting a 94-year-old man to retire? So much for those forward-looking markets and, yeah, sorry. If the market is like all knowing and all pricing and, oh, yeah, all that stuff, it's already been factored in, then how are you surprised when a 94-year-old guy says he's retiring? Maybe you might want to think that one over. But the other story that I want to really contrast with this Ford narrative that's going on is Ferrari this morning. And, Ford v. Ferrari, I had already written the title when I realized, oh, that was a movie too. Yeah, I haven't seen that one. I hear it was good. The Motorheads really liked it. Christian Bale, Matt Damon. Yeah, all those guys were in it. But look, Ferrari is doing great here. Profit up 17% year over year. And they're saying it's being driven by, and I quote, robust demand for personalized vehicles. So look, guys, if you're wondering how you're going to put the kids through college, if you're wondering how you're going to make the rent this month, you're sweating the return of student loan payments, you're up to your eyeballs in credit card debt, the car's getting repoed, at the very least, you can take comfort in knowing someone out there is still getting themselves a personalized Ferrari. As a matter of fact, a lot of people are out there ordering themselves personalized Ferraris. Now, doesn't that make you feel better? Oh, it doesn't? It makes you want to shake your fist up at the sky. It feels like a gut punch or a donkey punch, whatever you want to call it. Yeah, it sucks. Look, guys, this is the uber wealthy doing incredibly well at the expense of everybody else. This is something we've been talking about. Private equity, looting Main Street, how the ownership class has done really well while inflation has eaten away at the standard of living for 90% of the population. You can see it laid bare with Ford, 64% profits down year over year, but Ferrari's doing great because everybody's ordering personalized Ferraris, right? That's your general partners and your private equity firms, the CEOs. They're all cashing in, living the high life. And, well, just keep that in mind because there's a lot of people, again, the people that are ordering the personalized Ferraris, these are the people who control the financial press. And these are the people who are telling you it would be crazy to not mint trillion-dollar coins, or it would be crazy to not extend debt ceilings, or it would be crazy to not print more money. These are the people who are buying personalized Ferraris. They're telling you all these things are crazy. And then we're over here, the 90% of the world is saying doing what we're doing is crazy. Just keep that in mind. Who actually controls the narratives you're hearing in the press? Other news we got going on this morning, Rite Aid has filed for bankruptcy. And 2023 called, they want their headline back. That's right. This is the second bankruptcy in 2 years for Rite Aid. Do I hear a third? I don't know. We'll see. But look, this Rite Aid got clobbered by the opioid settlements. They filed bankruptcy to try to get out of it. They came out of bankruptcy in 2023. And then whatever happened, things happened. The pharmacy business is struggling, right back into bankruptcy. They're looking for a buyer this morning. This rumor was around about a month ago, and it looks like it has finally been confirmed. On the trade war front, also, we've got Marriott Hotels is lowering their guidance. Not too surprising there. We've seen U.S. tourism has really been hurt by the trade war. In particular, Canada to U.S. tourism has been hurt. So that's taken a chunk out of Marriott this morning. We've also got possibility of EU making some retaliatory tariffs against the United States, something they've been slow to do so far. Really, China has been the only one that's outright retaliated against the U.S. The EU is said to be preparing a list of $100 billion worth of U.S. goods that would be targets for tariffs if the talks don't go well, the talks that either are or aren't happening, depending on who you ask. But it looks like the European Union is preparing their stick. I don't know what kind of carrot they're offering. Everybody is posturing, battle lines being drawn. But you know what? We're super duper close to a deal with somebody we think, or a framework or a pathway or a roadmap to a deal, whatever you want to call it. All those silly comments. We still don't have any trade deals. My gut still tells me India is going to be first, with an outside chance of maybe it would be somebody like a Taiwan or a Saudi Arabia. But as of yet, still no deals. It's been about 30 of those 90 days. Meanwhile, China, you don't hear anything about the struggles in China. You got to go to YouTube channels like Business Basics, China Observer. They're the only ones who are reporting on any of the difficulties that are happening in China right now, on the factories shutting down and people being laid off. It's really hard to get any accurate news out of China. You won't get it from our financial press. Our financial press will only report on hardship in the United States as it pertains to this trade war. They won't say anything about hardship elsewhere, because hardship elsewhere might imply that the United States has any leverage in this trade war, which might be seen as siding with Orange Man. And the financial press must avoid siding with Orange Man at any and all cost. And so they just won't cover it. But meanwhile, China is holding a meeting this morning, a joint ministerial meeting of their various financial regulators, to talk about stabilizing the economy. In other words, stimulus. And again, if China is super strong and the trade war has no impact, and we're just, we're the mighty dragon, we're not doing anything, we're not struggling, why are you holding emergency meetings to talk about how much money you're going to print and fire off into your economy? Maybe things aren't so rosy over there. I just throw it out there. By the way, welcome to the 50 Cent Army once again, you adorable little bastard you. I love seeing you guys in the comments. Give my regards to Emperor Pooh the next time you see him. This 50 Cent Army is China's little bot farm that they send to comment on anything negative that's said about the Chinese economy anywhere in the world. They're really cute. They really are. We got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in markets today. Don't forget that like button for the algorithm. And if you're new here, hit that subscribe button. It's written on the mug, so you pretty much have to. Come on back tomorrow, because we do this one every day. Have your coffee with the melon heads. Right now, the S&P 500 is down about 0.9%, 49 points lower. Looks like a little bit of maybe trade war hysterics going on. We've got some safe haven demand going on this morning. We'll talk about that in a minute. But really, with the S&P, what I want to zero in on, looking more at a long-term chart here. These are daily candles now, and I want to show you April 2nd. Here's the closing price on Liberation Day, all right? We closed on Liberation Day at 56.68 on the S&P 500, and right now we are at 56.50. Now we're going to open a little lower, but the S&P 500 has erased virtually all losses from Liberation Day at this point. Why? Why has this happened? I mean, talk about this, the return of this blind, euphoric optimism, default number go up. What has really changed since Liberation Day? I mean, has the global economic situation improved or lessened? Look at what the price of oil has done. Look at what the price of gold has done. Do you really think stocks are giving you an accurate reflection of what's going on in the economy right now? Absolutely not. just important to step back from this. I mean, this whole grind higher, the market is pricing in Donald Trump's absolute and total surrender in the trade war and a return to the way things were. That is not going to happen. It just isn't going to happen. That's not the way the guy rolls. I mean, you could say what you want about the politics and no, it hasn't gone so well and it had whatever. Regardless of the political stance, it is just blindly optimistic to act like this trade war is just going to go away, which means this market's getting ahead of itself. Something to think about. The Dow, meanwhile, 286 points lower this morning, 0.7% lower. And the NASDAQ is off by 247 points, 1.24% lower, pretty much at the low of the morning and falling. And again, the NASDAQ is one. I want to look at the long-term chart here, guys. April 2nd, here's the closing price on the NASDAQ. We closed at about 17,600. The NASDAQ is actually higher than its closing on Liberation Day, currently, or closed yesterday, 17,844. We're probably going to open below that level now because we're down a lot pre-market here. But again, the market has just erased all of these losses from Liberation Day, and I think it's just blindly euphoric. It's wrong. Let's just put it that way. This is the same market that was surprised by a 94-year-old man retiring. I'm just going to point that one out. Meanwhile, the U.S. dollar is a little bit weaker this morning at 99.52. Now, that's off by 28 basis points, but it's also pretty much right where we were this time yesterday morning. We saw a little bit of strengthening in the dollar throughout the day yesterday. We've since given that back. Couple of currencies I want to check in on. The Taiwan dollar, we've been talking about that for the last 2 days. The Taiwan dollar has weakened a little bit. Just a reminder for you guys at home, USD TWD, the number of Taiwan dollars to make $1. So this chart going down is a strengthening Taiwan dollar. This chart going up is a weakening Taiwan dollar. And if we zoom in here on just the last couple of days, you can see we have had, some might call it a dead cat bounce. It's not really a dead cat bounce. The Taiwan dollar has weakened off of its highs, shown as the lows on this chart, in the last couple of days. Currently 29.94 Taiwan dollars to the USD. That is up from a low yesterday of 28.9. So we've seen a little bit of a correction, only about half of what was gained yesterday. The story in Taiwan, watch those insurance companies in Taiwan, watch their big exporters like a Taiwan Semiconductor. Still, they're trying very carefully to control the narrative going on in Taiwan. Like, I just want to show you this article that came out. This is just this morning. Taiwan sees currency pressures easing, no insurer issues. There's a lot of effort to control the narrative in Taiwan here. And, okay, no problems with our insurers, even though they were all getting crushed yesterday because they didn't hedge their currency exposure. Don't worry, currency pressures are easing. All right, half of the gains from yesterday have been wiped out. The Taiwan Central Bank said upward pressure on the local currency is easing and will check on banks to ensure inflows are investment and not speculation, following a recent surge in the island's dollar. That's interesting there. This is a very heavy-handed approach. The Taiwanese Central Bank is going to check on banks to make sure they're investing and not speculating, as if to suggest there's going to be punishment for anybody who's trying to make money off of this Forex swing that's been happening with the Taiwanese dollar. This is a very heavy-handed approach from the central bank here. And it goes to show you that, the rhetoric talking about irresponsible commentators causing the currency to strengthen and, oh, don't worry, everything is fine here, nothing to see here, move along. And then at the same time, they're sending their financial jackboots into the banks to make sure they're not participating in this speculation. A lot of effort to control the narrative, to control what people are saying, thinking, and doing by the central bank here. That's worth pointing out. That is not somebody who is operating from a position of strength and confidence. That is somebody who looks very desperate to me. So keep an eye on that Taiwan story. Another currency we haven't checked in on in a while is the Japanese yen. And once again, we're seeing this chart head lower. That is the yen strengthen. 3 days in a row, it's kind of been lost in the rhetoric because of the big move that we've seen in the Taiwan dollar. But we are seeing the Japanese yen. It's resuming its prior strengthening here after a brief period of weakening. It looks like this chart is still heading lower. We kind of got this sawtooth pattern here, and that is still underway, guys. So watch that one, especially watch that 140 level. that has been heavily defended several times in a row, going all the way back to September of last year. Looking over at the bond market, we've got the 30-year treasuries at 4.842. That is higher by about 1.3 basis points this morning. The 10-year treasury unchanged at 4.343. The 2 years at 3.799. That's actually lower by 4 basis points. And the 1 month is unchanged. So not a lot of movement in the bond market here. We have the Fed coming up later this week. Tomorrow is the FOMC meeting. That will probably move bond markets one way or another, although I'm not expecting any action from the Fed at the FOMC. Neither is anybody else. You got a 95.5% chance of do nothing, a 4.5% chance of a 25 basis point cut. I think that should be zero. They're not going to cut. Any cuts will be seen as acquiescing to Donald Trump and his assault on the Fed's independence, or whatever you want to call it. So I don't think the Fed is going to do anything tomorrow. The question is, what does the Fed say tomorrow? Do they give us any hints about rate cuts maybe further down the road this year? I don't think they're going to do that either, because of the jobs number on Friday. That was, at least the headline looked really good. It gave the Fed the cover they need to do nothing. And of course, you're going to get your silly political posturing from the partisans in the FOMC press pool. They're going to be fishing for some kind of a talking point or soundbite from Jerome Powell they can use to say orange man bad. Look for a lot of questions about the president wants to fire you. The president said this. The president said that. It's going to be a circus. The FOMC tomorrow, I think, largely just doesn't matter. They're not going to do anything. Looking over at the commodities board right now, we've got gold is sharply higher this morning. Spot gold is up by $61.60, now 70 cents, heading higher as we speak. $3,395 for spot gold. That's higher by about 1.8%. Spot silver is higher by 2.2%. $33.20 for spot silver, up 72 cents this morning. I like the shiny. Copper, meanwhile, is higher by 1.1%. Platinum and palladium are both up by 2% and change. Crude oil's catching a bid here. Look at that, $59.28. WTI crude, the June futures are higher by $2.18. I don't know what's driving that right now, to be honest with you. There's some economic optimism when you see copper going higher and crude is going higher. That's interesting. That would suggest some economic strength. But at the same time, you've got gold going higher along with it. That doesn't happen during periods of economic strength. So commodities are sending some weird signals here. But take a look at the gold market, something I want to show you guys. We've had 2 good days in a row now for gold here, $33.95 and rising. Again, still nowhere near that all-time high that we hit intraday of about 3,500. That was on April 22nd. But gold appears to have arrested this 6 or 7 day decline that we were in. Looks like that was just a bull flag, and we are continuing higher for gold here. Bitcoin, meanwhile, sitting this one out, $93,776. It's down by about $1,000 from yesterday. Still above this red line. We'll see if this line acts as support when we hit it, but Bitcoin not looking so good here this morning. Now, let's talk about the big story. This one in the Wall Street Journal. Ford's first quarter profit drops 64%, and they suspend the outlook. Tariff-related uncertainty led the company to withdraw its profit forecast. Guys, I would just mention that drop in profit has nothing to do with tariffs. This is all what happened in the first quarter. Now, look, tariffs are not going to help. Tariffs are definitely going to make things worse. But Ford has been on the rocks for quite a while here. That 64% drop has nothing to do with tariffs. If anything, people front-running the tariffs may have actually lessened the impact that we might have otherwise seen. Production halts and an unprofitable EV business nearly wiped out Ford's net profit in the first quarter, the company said on Monday. Ford reported net income of $471 million, down from $1.3 billion a year earlier. Revenue fell to $40.7 billion, down from $42.8 billion. That's about a 5% year-over-year drop in revenue for Ford. Wholesale deliveries fell 7% to 971,000 during the 3-month period, which Ford attributed to slower production of some models. Adjusted pre-tax income shrank to $1 billion from $2.8 billion a year earlier. The result exceeded analysts and Ford's own forecast in February when it projected adjusted earnings of around nothing for the quarter. So, artificially lower your expectations. That way you can report a beat, even though your profit fell by 64%. You still get the headline you want. At the same time, Ford suspended its guidance for the full year, saying it couldn't predict the full impact of President Trump's tariffs on its business. The company expected that tariff-related costs would shave around $1.5 billion off its adjusted pre-tax earnings. While Ford's tariff bill will be lower than many competitors, the impact still amounts to huge numbers, Ford CEO Jim Farley told analysts on a call on Monday. Ford stock, all things considered, is actually holding up pretty well here. They're down only 2%, $9.96 ahead of the opening bell, down about 21 cents. They just reported a 64% decline in net profits. The fact that the stock is down 21 cents, that's actually not so bad. Ford's holding up remarkably well, all things considered here. Meanwhile, luxury car maker Ferrari warns of U.S. tariff risks after a 17% jump in first quarter profit. You notice they're leading with the tariff risk here, and we don't want to draw any attention to the fact that luxury custom automakers, supercar manufacturers, they're doing great. CNBC, we wouldn't want to tip that the bifurcated economy is being laid bare for all to see this morning. Luxury car maker Ferrari on Tuesday reported a significant upswing in first quarter profits, citing robust demand for personalized vehicles, but warned U.S. President Trump's trade policy could hit earnings this year. The Maranello, Italy-based sports car manufacturer posted net profit of 412 million euros. That's almost as much as Ford for the first 3 months of the year, reflecting a 17% increase from the same period last year. Analysts had expected first quarter net profit to come in at 412 million euros, according to Reuters. Another year is off to a great start, said CEO Benedetto Vigna. Pardon my non-regional diction here. I don't get out much. In the first quarter of 2025, with very few incremental shipments year on year, all key metrics recorded double-digit growth, underscoring a strong profitability driven by our product mix and continued demand for personalizations. That's right, custom Ferraris, personalizations. That's where their bread and butter is. The market for that is doing really well. A custom Ferrari is anywhere from $500,000 to $2.5 million. Those cars are selling like hotcakes, but Ford profit is getting wiped out. Looking ahead, Ferrari warned that the introduction of U.S. tariffs on EU cars imported into the U.S. could negatively impact the firm's profitability this year. The 2025 guidance is subject to a potential risk of 50 basis point reduction on profitability percentage margins in relation to the update of the commercial policy following the introduction of import tariffs on EU cars into the U.S., the automakers said. So they're saying, yeah, it's going to hit us. We're going to raise our prices, and don't worry, our customers can afford it. So Ferrari doing just great here. Well, let's check in with the stock, up $4.43, about 1% higher ahead of the opening bell. $471.08 for Ferrari, ticker symbol RACE. That stock is doing just fine. Somebody who's not doing just fine, Rite Aid files repeat Chapter 11. It's second in 2 years, but who's counting? The Philadelphia-based chain entered bankruptcy again to seek buyers for its assets. This one hit just late last night. Rite Aid filed for bankruptcy on Monday. Its second Chapter 11 filing within 2 years to look for buyers for its assets. The Philadelphia-based chain shut down hundreds of stores in its last bankruptcy, resolved government and private lawsuits over its opioid prescriptions, and handed control of the business to bondholders. Rite Aid emerged from Chapter 11 last August with $2.5 billion in bank loans on its books that have lost value in recent months as the company missed its post-bankruptcy projections. They didn't even make it a year. They emerged from bankruptcy in August last year. The Wall Street Journal reported last month that Rite Aid was considering a second bankruptcy filing. The company listed liabilities and assets between $1 billion and $10 billion each, according to papers filed Monday with the U.S. Bankruptcy Court in Trenton. So they're looking for buyers. If they don't find one, they're just going to liquidate the company, sell off the real estate, sell off the inventory, and collect whatever they can to pay back their bondholders. Not good for Rite Aid. Now, meanwhile, Marriott lowers their guidance as trade war adds uncertainty to travel. This one you probably could have seen coming just this morning in Bloomberg. Marriott said in a statement Tuesday that revenue per available room would increase by 1.5% to 3.5% in 2025. The company had previously projected that that measure would rise between 2% and 4%. So, okay, they're lowering estimates, but they are lowering estimates for lower growth, but still growth. Revenue per available room is going to rise by 1.5% to 3.5%. That means they're raising prices. Now, we don't know what that's going to result to their earnings, but hotel rooms are going to get more expensive, and Canadians are not coming to the United States anymore because Orange Man said mean things about 51st State, and that is hitting Marriott here. Marriott stock, though, doing all right. Look at that. Stock is up 4.1% ahead of the open, so it seems like maybe the market was a little ahead of itself. The stock is down 11.3% year to date, clawing back some of those losses, up more than $10 ahead of the opening bell here this morning. Meanwhile, back on the trade war front, EU targets 100 billion euros of U.S. goods with tariffs if the talks fail. So this is the EU is getting their stick ready. They're not using it. They're just letting us know it's there just in case. The European Union plans to hit about 100 billion euros in U.S. goods with additional tariffs in the event ongoing trade talks fail to yield a satisfactory result for the bloc, according to people familiar with the matter. The proposed retaliatory measures will be shared with member states as early as Wednesday, and consultations will last for a month before the list is finalized, said the people who spoke on condition of anonymity, anonymously sourced. No big surprise there. Separately, the European Commission, the bloc's executive arm that handles trade matters, is expected to share a paper with the U.S. this week to try to kickstart negotiations, Bloomberg reported earlier. Proposals from the EU are expected to include lowering trade and non-tariff barriers and boosting investments in the U.S. So a little bit of carrot and a little bit of stick here this morning on coming from the Europeans. It looks like they're willing to talk. Meanwhile, China plans Wednesday briefing on market stabilization measures. And gee, China, if you are a number one super ultra strong dragon and the trade war doesn't affect you and you laugh at the silly West, why are you holding briefings on market stabilization measures? Stable markets do not require stabilization, am I right? Well, China's central bank and financial regulators will hold a press briefing on Wednesday to discuss policies aimed at stabilizing markets as the country's economic outlook comes under increasing threat from U.S. tariffs. Officials from the People's Bank of China, the National Financial Regulatory Administration, and the China Securities Regulatory Commission will speak at 9 a.m. local time about a financial policy package to stabilize market and expectations, according to a government notice on Tuesday. In other words, PBOC go Burr. They are going to print money. They're going to fire more stimmies into the economy in order to stabilize markets that apparently don't require stabilization. Make it make sense. The briefing will be closely watched as the country faces intensifying pressure from U.S. tariffs and growing concerns over its economic outlook. With President Trump's 145% duties threatening to hurt exports, expectations are mounting that Beijing may unveil new measures to steady the economy and shore up confidence. And I don't know what this whole threatening to hurt exports nonsense is about. Bloomberg is already reporting that ships aren't heading here. Bloomberg is reporting on the ports, seeing less and less activity and imports coming down. So what is this? Hey, it threatens to hurt exports. The exports are already getting hurt. Why do you have to go to obscure YouTube channels to find any truth about what's going on in the production lines in China right now? Well, because of political bias. That's why. There are signs that the trade war is already weighing on activity and sentiment in manufacturing and services, with purchasing managers index surveys pointing to a slowdown in April. Even so, trade flows held up last month, indicating the impact of U.S. tariffs has yet to show up in actual shipments. I don't know so much about those trade flows held up last month. That's stuff that was already bought. The tariffs didn't even go into effect until I think the 10th. So that's a little bit misleading there as well. And last but not least, I had a couple people send me this one this morning talking about this ASEAN 3 position for resilience amid unprecedented trade shocks. It seems like the central banks of China, Japan, and Korea all got together and issued this joint statement basically condemning protectionist trade policies, obviously targeted at the U.S. and the tariffs from the Trump administration. I wouldn't read too much into this, guys. All 3 countries are being targeted big time for tariffs. They all run big trade surpluses with the United States. That doesn't mean China, Korea, and Japan are about to create this big alliance to take on big bad orange man. I mean, at the end of the day, China and Japan and South Korea, their militaries are ramping up and building up and arming in order to fight each other, right? Japan and Korea on one side, China on the other. They're not about to play nice in the sandbox just because tariffs. That's just not going to happen. I mean, China has spent the last 30 years preparing for an invasion of Taiwan that would most likely escalate into a regional, if not global war that would drag in Korea and Japan on the other side. The idea that tariffs has suddenly wiped away 30 years of that pre-positioning and that mobilization is just silly to me. I really don't expect any kind of big cooperation. Maybe you'll get some kind of joint statements like this, but it's not going to have any major impact on geopolitics, certainly not on the trade war. And I just want to say thank you very much to Mr. Break My Wallet Motorsports, who says, yeah, I said donkey, I didn't finish it. All right, I'm not going to say that one out loud. That's the drawbacks of a live show. When these thoughts enter your brain, sometimes they get halfway out before that voice on your shoulder says, Jack, don't do it. Jack, no. Yeah. Didn't quite finish it, but yeah, you caught me on that one. Thanks, Break My Wallet Motorsports. We're trying to move past that one as quickly as possible. Also, thank you to my buddy Travis over at Real Estate Mindset. What's going on, Travis? He says, why are you so cool? Love you, buddy. Thank you. Travis, I am as uncool as they come, brother. Trust me. I gave up trying to be cool as soon as I turned 30 because I figured that was a wasted effort. So I am very comfortable in my lack of coolty. Don't worry, brother. Maybe that's what makes me cool. Maybe if you just don't try, maybe if you give up because you admit just how uncool you are, is it like proof that the world is round? If you go far enough in the uncool spectrum, you're back to being cool again? Is that how that works? I don't know. But my mom thinks I'm cool. Thanks again, brother. You're awesome. Love you too, brother. Good luck over at Real Estate Mindset. And Nashville Pasta Man says, a Sheehan joint statement, May 4th, Trump unites Asia. That's exactly what I was talking about, Pasta Man, just a few minutes ago. I did see that you sent me that one. Mish caught it this morning too. I had a couple of people tag me on that one in Twitter. I just don't see a lot happening there. It's not like they're going to be like, well, we've had guns pointed at each other for 30 years, but now because tariffs, we're just going to be best friends. Doesn't really hold water. I do see that joint statements. It's going to stop there. There's not going to be any joint activity, any united front economically. They just won't do it. They're too busy hating each other. I just don't think that's going to work out that way. But thank you, Pasta Man, for supporting the channel. And Richard Bell says 6-phase motors and hybrid new fuels, Tesla toast. What are two things I know nothing about? 6-phase motors. I've never heard of a 6-phase motor before. Hybrid new fuels, are we talking about like hydrogen cars, fuel cell cars? Those are out there. Look, Tesla is toast. I don't think Tesla is toast because of any particular emerging technology. Tesla is toast because of Elon's politics that alienated his customer base. Right? The people that made Tesla what it is are on the left, on the far left. And Elon Musk just all of a sudden joins the right. Predictable outcome there. So that's a reason Tesla is toast. Tesla trades at big tech valuations, even though Tesla is a car company. That's another reason Tesla is toast. Because, I mean, look at Ford, look at GM, look at Stellantis and the multiples they trade at, and then look at the multiples Tesla trades at. That's why you always get these silly statements about humanoid robots and all this other stuff, because they need to always be the shiny new thing in order to maintain those valuations. That's another reason Tesla is toast. EVs were maybe not an outright bubble, but certainly are in decline right now. We went way too far to one side with the EVs. Now they're in decline. That's another reason Tesla is toast. There's plenty of reason Tesla is toast. New fuels, 6-phase motors, maybe it's exciting new technology, but those things are a long way from being mass market production vehicles competing with Teslas. So that may further burn Tesla's toast many years down the road. But in the meantime, there's plenty of reasons to avoid Tesla before we get to that one. Thank you very much, Richard Bell, for supporting the channel. Pigo's Trading Desk says you got to hear Mnuchin at Milken's at Milken. Oh my G, Doomsday Day. Okay, I haven't heard that. I don't know what we're talking about here. It's talking about Secretary Mnuchin. Anytime I hear Secretary Mnuchin, it makes me wonder what's going on at New York Community Bank. That's a name I haven't checked in at a while. Secretary Mnuchin came in with that $2 billion rescue of NYCB. That was very suspicious. Why did a bunch of Republicans bail out a bank that does public housing projects in New York City. That didn't sit right with me. I didn't quite get that or understand what the goal was there. But as far as these statements here, I'll have to parking lot that one because I haven't heard what it is they're talking about. But look, a lot of people are crying doomsday these days because the people who are buying those custom Ferraris, what's made them insanely wealthy is at risk. So from their perspective, it is doomsday if these tariffs keep going and if private equity isn't bailed out and if we get this deflationary bust because these people are up to their eyeballs in debt. So that doesn't surprise me, although I can't comment any further on that because I just didn't hear the soundbite in question. But I'll go look for that one. Thank you, Pigo, for everything you do for the channel, brother. He's back again. He says, oh, Milken Institute. Okay, he spoke yesterday and Besson. All right, that one is going on the research board. Mnuchin's comments at the Milken Institute along with Secretary Scott Besson. Thank you, Pigo, for the clarity there. And again, for supporting the channel. I appreciate it. But again, I didn't see that speech, so I can't opine on that one. It's kind of a slow day in the news here, guys. You know, the Ford statement, the Ferrari statement, the Marriott, there haven't been any big breakthroughs. I get a little nervous when things are this quiet. All right. When I see stock markets have just wiped out all the losses from the trade war. The trade war didn't go away. The trade war is arguably worse than it was on April 2nd. So why then are markets higher than they were on April 2nd? That doesn't make sense. Be careful on leverage. That's the one thing I would just keep reminding you guys. Be careful anytime you're going out on leverage. I see a complete and total lack of price discovery anywhere in financial assets right now. That makes me nervous. It's very hard to handicap when the prices are just arbitrarily made up. Anyways, I just want to say thank you very much, everybody, for your generosity. Thank you for the super chats, as well as you, my magnanimous melonheads on Patreon and YouTube. You guys rock. Thank you for supporting the channel. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody else, till next time, live small and dream big.